Hi, Chad. Welcome back to another trade recap. Today is Wednesday, I guess. I think it's Wednesday today. Let me have a look. Yeah. So we took a trade on Nasdaq today. Uh, it was a great trade, bro. But yeah, man, looking at this right now, I'm thinking like, what the hell just happened, dude? Like, look at this. It moved like 173 points beyond this weekly high. So my initial target was that weekly high, but when I saw price forming this swing high here, all right, I trailed my stop loss below this low right here, as you can see, exactly below that low. So that was almost like, yeah, 13 point. Got stopped out with the rest of the 50% position just below that low. But I took a partials above this high, right around here. So yeah, we'll go over this trade, why I took a long today, and what are the context behind this trade. Okay, I'll go over the trade. And before that, make sure you're subscribed to the channel. If you're not, please do me the favor, bro. Subscribe to the channel and give a thumbs up. And yeah, man. Also, make sure to check out Lucid Funding. Still 40% discount going on. So yeah, man. Grab them quick, bro. All right. As you remember, I think yesterday I mentioned on the daily time frame that we have this old BC right here, which is a level of interest from me. I would probably gonna be looking for that. Okay, and price was around here. I told you that either gonna I would either prefer asymptotic that high, which I think we do have currently, but yeah, I was expecting a retracement today, but yeah, man. If market doesn't want to give you that, you just have to be aligned with the trend. So we took out that high. I think it's probably gonna take out these highs, then gonna retrace down. If that doesn't happen, probably we're gonna make another lower low. These are the two conditions. Either we're gonna sweep these highs, or we're gonna make a lower low, retrace back into this range, then push higher. But as I told you guys before, on the next recap, I would be looking at this BC right here and look at the closing of yesterday's candle. This is the daily time frame, right? And this is a weekly high. If you go on your weekly time frame, weekly chart, you'll see this is indeed a weekly high. And Tuesday we closed within this BC right here, failed BC. So if we drop down to hourly time frame, what do you see right here? We've been chopping around within this gap. We it it didn't give us any clear break either above that gap or below that gap. As you can see, all of them are weak. All right, all of them are wicks, and every time we closed outside of the range, we pushed back in with the next candle. Pushed, uh, look here, closed outside, pushed back in, closed outside, pushed back in, or we just created some wick, raided some liquidities, and finally we took out this low. All right, tapped into this order block. This order block, where is the right here? That was the order block, mean threshold of that order block. Okay, so once I saw that, I wasn't in front of my chart. I think at around 8:30. I was a bit late to the chart today, but I'm glad that I'm late to the chart, bro, because there was a lot of thing going on. And as you can see, this uh, old fair value gap, how price respected the midpoint of that fair value gap. See, right here, we created the high, dropped down, then we closed back at the midpoint of that fair value gap. Then this candle, then look at this candle once. Let me see. I think there was something on the 15-minute time frame at around that time. All right, so this is the this is where I went long, right? So we took out these lows before 8:30. All right, I mean before the New York session begin, we swapped these lows, so that probably gonna be our high of the, I mean low of the day. Then we had this market structure shift. So all I was trying to see is the failure swing low right here. Probably gonna engineer some sell side liquidity. As you can see right here, we created a low and then we rated that. All right, so here's the thinking process. Once we most of the people who are looking at the 5 minute or 15-minute time frame, they see that we made higher high, we made another higher high here. As soon as we break this level right here, what they're gonna do, they're gonna put some longs right there, putting their stop loss just below this low, thinking that we are gonna make higher highs and we're looking for higher prices. So yeah, it should not be going below that. But I'm looking at this point of interest right here. This is my real point of interest. I don't want to see price invalidate this swing low right here. All I want to see a rate of swing low, but still price staying above this swing low right here. So that is a significant swing low for me. And you also could have used this as your order block, this one. If you use the body, as you can see, you could have used that one. So once we drop below this, all right, we pushed back at around 8:30. But if we drop down to a 5-minute time frame, look what was happening at around that time. I saw this wick right here, and price was pretty much ranging within from this point of price to this. All right, it was just ranging. So I was low-key waiting for a market structure shift to occur, which we had here right there. So now if I drop down to a 1-minute time frame, look, we had our market structure shift right here. Price dropped down, swapped this low. So now if I'm expecting a retracement, I don't want to see price take out this low. Exactly the same thing I explained on the hourly time frame. And I entered this trade with the limit order today. Bro, what I'm doing, I had my limit order on this order block. You'll see this is the order block that I used. This is where I had my limit order, and because of the slippage, as you can see, it filled me a little bit lower than that the opening of that down close candle, but I had my stop loss below this low, and then price pretty much ran towards this high. I took off a partial there, then trailed my stop loss below this low, and yeah, got stopped out. I mean in profit. But yeah, so far it was a good trade for me. But here's one thing for you guys. All right, look, so we had this market structure shift, right? Do you see we had a tiny swing low right here, this swing low right here? All right, so you took that out with this move down before 9:30. So if 9:30 giving us a what, a break of structure or market structure shift, what do we want to see? We want to see price is allowed to take a retracement back into this whole range, but staying above this low. And if we can see an SMT, that's the best condition you can ever look for to get in a trade. Do you see that we had an SMT with that low? Why? Because we want to see these kind of fingerprints on the charts that indicates us that probably that whole move down is a fake move. And yeah, it's majority of the time when we have like buyers, all right, every time you see a swing low being rated at around certain times, try to do one thing, try to see what the correlated pair is doing. All right, and do you guys see what I'm saying right here? There you go. Here is your model. The thing that I think I've said it many times. This gap was created before this low got rated, right? Then you close back above it, created this swing low. So there are multiple confirmation for this trade. You could have entered on this trade as well, but as I've already taken one trade today, I didn't take this again because I don't want to mess with my discipline, bro. So this is your IFVG entry. Liquidity runs. Gap was unfilled until we rated these lows. Then it came back above that. So you could have entered there as well. And look at the time. It was happening at around 8:30. So you could have taken this trade as well, targeting that weekly high. That was 86 points. So there were multiple entries today. And look at this. I got another one for you. We had this gap here. I'm just gonna take this off. Okay. At this gap, when did that form? It formed just before we took out these lows, right? Do you see that we retraced back into these? Or you could have say that we have taken out these lows as well. So yeah, price didn't retrace back into that. I mean, that was unfilled before we rated these lows, right? So these gap, as we are bullish, we want to see being inversed, and we can expect price to never revisit these levels. All right, so that could have been your trade. This is your safer place to put your stop loss. And oh man, I really want to crash out, bro, but I don't want to do it. I look at that. But yeah, man, I think where's my trade? Wait a minute, chat, give me a moment. All right, so here's the trade. I think this trade was at around yeah, it was like 4.9 or almost like 5 hour trade. But yeah, if I had my stop loss below this low right here, I could have captured all that move. But I don't regret my decision, bro. I learned every day with every single mistake I'm gonna make going forward. All I do is whenever I make a mistake, when it's time to journal, I try to look back on those trades or the setups I've taken, and try to figure out what that one thing that I missed, or what's that I missed actually. So if I'm able to point those things, and from the and next time I'll maybe like know them on my journal, and over time when I encounter these things more often on the charts, over time what's gonna happen is that I'll be able to see those things on the chart, and I'll probably gonna be making less mistakes while placing this kind of stop loss or whatever it is, or play in terms of targeting entries, everything. Like you can improve a lot by just refining your removing your mistakes, I would say, one by one. Not every mistakes like at once. You have to like remove them one by one if you can. But I say this so many times, like there's always gonna be room for your development. All right, there's like no limit how much you can improve in life. You could take that for your trading or for your life, whatever goal you're uh, right now pursuing. But yeah, man, there's always going to be room for your development as a human being, as someone who wants to be the best. So yeah, try to see your mistakes, journal them, and when next time you encounter these mistakes, try to not do these mistakes again. All right, that's how you can be the best. And yeah, man, I hope you guys learned something new today. And one thing I wanna give you guys another sauce, bro. Like, why is this a auto block, right? You might be asking. So you took out these lows, you have a huge liquidity sweep or break of structure right here. All right. All right, this might be something new for you guys. Whenever you see something like this. Suppose this is a low, right? And this candle took out, this is a down close candle, and it took out that low or rated that low. And then the next candle, or maybe then a couple next candle, aggressively broke a high, right? So when price comes back to the candle that took out these low, that low right there, you can expect price to respect that and maybe possibly take a trade off of it. All right, I'm just gonna leave you with that. We have taken out this low, then the next candle or the next couple candles took out these liquidities. So this is, and it's happening just before 9:30. So when, and look, we have a low resistance liquidity run here. All right, we have a buy side liquidity right here, and price just stalling below that. Why? So that it can drop into that and grab more orders and then run these highs. All right, and I'm gonna give you another example. There you go. There you go. I think we had a low right thing. Let me see these candles. That low comes at 25,845.06. 06. These both are same. I mean, it can take this as a order block, but yeah, I think the first one is more valid. Yeah, whatever. All right. So we had a breaker block here. I mean, you can use that as your order block because we have swept these lows with this down move right here. This was a aggressive move down, right? But as we pushed higher, right, we invalidated all this downside movement, or we all the sellers are out of the game. So when price is dropping down, you want to look at the lowest point of interest for buyers to take add on more position to their longs. Where is that? It's right here. That this is your first market structure shift. So if this low right here is a very significant level to look at. All right, now I'm not gonna make this video any more complicated, bro. I'll probably uh, make some separate videos for auto blocks or whatever. But yeah, man, hope you guys enjoyed this video, learned something new. If you did, give a thumbs up, make sure you're subscribed, and yeah, and follow me on X. And also make sure to check out Lucid Funding. And if you want to trade live, make sure to check out Bybit. You can trade indices, metals, commodities on Bybit platform. It's a crypto platform, almost like Binance, but there you have these options that you can. They have these features called Tradify, almost like Tradify, within their app, where you can trade with these forex pairs or whatever, except futures, right? So you can transfer your USDT from your Bybit wallet to that Tradify account within their app. It takes like well, I think 30-40 seconds to transfer your amount from your wallet to that Tradify account to trade with that amount, right? And for withdrawal it's the same. So yeah, if you want to trade live, make sure to check that out. And yeah, I guess I'm gonna catch you guys onto the next one. Till then, be safe, take care of your health, your mental health. Peace out, chat.